You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever interesting, ever compelling, ever exciting Options Insider Radio Network. And again, if your curiosity is piqued by all this Flash Boy stuff, and I encourage you to check out the latest addition to our network, the Trading Tech Talk program. We break down all that cool stuff: HFT, messaging, bandwidth, colocation, data centers, latency, all that stuff they talk about in Flash Boys. We break it down on that show, as well as quite a few other fun topics. Trading Tech Talk. Check it out wherever you find this fine program. And while you're there, make sure you download our mobile app. You can, of course, find it for iOS, Google Play, and the Amazon App Store. All three of the big fish there you can find it on. You can stream all the episodes of this program, as well as Trading Tech Talk, every other episode on the network. You can download them for offline listening. All sorts of cool stuff. You can even send us feedback, questions, and comments directly from the app there. Really cool stuff. Check it out, the Options Insider Radio Network mobile app. I think you're going to like it. All right, and joining me on the old program today, starting off, we'll give him pride of place this time because he couldn't make it last time. None other than the pride of St. Charles, Illinois, good old Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here, and I always appreciate the pride of place and enjoying the fact that it's snowing outside. I'm looking out my window. Not often you see snow in the middle of April.
There were rumors of snow, but it's actually coming down by you, huh? Oh,
it's coming down very legitimately right now.
So 80 degrees 2 days ago, and then it drops 50 degrees in 2 days, and now it's snowing. So there we go. That's Chicago for you in a nutshell, listeners. All right.
Gotta love it.
And also joining us from deep in the heart of downtown Chicago, none other than the man of many hats, known also as the Viceroy, known also as Alex Jacobson from Options Express by Charles Schwab. Mr. Jacobson, welcome back to the program, sir.
Hey, Mark, good to be here. Mike's weather report sounds like the market today. I edited a blog just before the close, and, I talked about the market was giving back the day's gains. And boom, we closed at the highs of the day. So go figure. But one other comment I want to make, when you talk about the expanding network, the interview with Blair Hull last week, and I know I hold myself in the geek community, but for those of you who are new traders or new to the industry, Blair Hull's story is the story of a geek. And if Blair is offended by that, I apologize. But a geek who turned his ability to program computers and learn how to make money from technology, who sold his business for, get this, $500 million. Probably the biggest market-making firm at that time in the United States. And some of you are saying, no, he meant million, not billion. $500 million when he sold his firm. So again, I always talk about the Kenny Griffith story about how he started trading converts in his dorm room. And of course, everybody says, yeah, his dorm room at Harvard. But smart people coming to the derivatives market and doing very, very well, benefiting from their knowledge and their ability to program, create technology, and understand. But a great listen with an industry pioneer.
Well, thanks for that plug, Alex. That was a fun episode to do. That's one of the reasons why I like doing that show, because it allows us to delve a little bit deeper into some of that stuff that probably wouldn't be appropriate for a show like this. We can touch on it, of course, here, but really dive into the weeds with a guy like Blair on that show. It's really, really fun stuff. We were very excited to get him on that program. Of course, that is indeed the Trading Tech Talk program. You can hear that episode we did with Blair Hull. It is episode 6, I believe, our most recent episode. It was a fun conversation to have. And speaking of fun conversations, we often have them on that show, and sometimes this man is also a part of them. He is none other than the Rock Lobster. Good old Andrew Giovinazzi holding down the option pit hot seat on the old show today. Mr. Giovinazzi, welcome back to the show, sir.
Why, thank you. I'm, again, always thrilled to be invited back. It always freaks me out just a little bit. I actually saw Blair Hull when I was in my youth, when he was still seen on the floor every once in a while when he had Hull trading. I think he sold, 1 year from the top? He didn't get the top, but I think he got close.
He came pretty darn close. He sold in about 99, I believe. And he was really the beginning of that wave of market-making firms in Chicago selling to the big banks. Until then, it was really very much a specialized Chicago industry, smaller from a broad financial perspective, at least. Smaller firms in Chicago dominated market-making, like Hull, of course, Timber, and there's the CTCs and all the other ones out there, Stafford that I used to trade for. A lot of firms in Chicago really dominated that business, and one by one, once Blair got the dominoes rolling, a lot of those big banks on the street said, hey, there's money in them, our hills, let's go check that out. And one by one, they gobbled up all the other market-making firms until there's very few left.
Yep.
And the rest, mid-size and smaller, have all kind of been shaken out of the business. And we have what we have today, which is an interesting mix and certainly a lot of grist for the mill for Michael Lewis and others to ponder in their latest tomes. Speaking of grist for the mill, a lot of it going on in the old markets today, so let's get to it because it's time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down what was moving on the old street today, and it was an interesting one. As Alex alluded to earlier, we had some interesting, I wouldn't say mixed, but not as aggressive activity as we saw, at least in the middle of the day, as we saw towards the end of the session, with the end of the session coming with most of the major indices closing up sharply higher. The S&P closing up nearly a full percentage point, or about 15 handles to 1830. The Dow closing up about the same percentage-wise to 146 handles to 16,173. The Qs closing up nearly a full percentage point as well. VIX cash coming off a little bit, coming off nearly a buck to 16.11. Since we just touched on the VIX cash, let's jump, as always, over there to the kingdom/principality known as Maine and check in with the Rock Lobster to see what he had cooking in his neck of the woods today. Mr. Lobster, what caught your eye in today's interesting explosion of upside?
I think the pernicious effects of the Russian incursion into Ukraine. Do you guys remember that movie in the 80s, Red Dawn or something? Wolverines! When the Russians invaded the U.S.?
Who could possibly forget the cinematic classic known as Red Dawn? I challenge you to watch that movie today and not turn around and immediately murder the first Russian that you come across.
I mean, unbelievable, right? But that's kind of what they're doing. They're sort of sneaking in. They're taking over some buildings. They're not really Russians, just really pro-Russian guys with that act like, special forces guys. It is pretty awesome. And then a Russian jet buzzes a U.S. Navy destroyer. I have to say, but anyway, I think that's a big part of the market. Like just short term, we'll just call it short term noise is from that. It's trading a little bit headline to headline. The economic news, I think, continues to be okay, not great, but it's positive. Was it enough to keep those momentum stocks sometimes at 200 or 300 times earnings or whatever, like Netflix was and some of the other ones? Maybe not. But they took a lot out of the QQQs. So part of that has sold off a little bit. I think the volatility is at least fair at this point for 16% VIX because we're certainly moving enough. So if we get a couple more days like this, we'll probably see the vol fall a little bit, but we could easily be down another 1 or 2% in the Qs again because of whatever reason. So I think there's a little bit more instability, I think, and part of it is from the Fed really, whatever they say they're going to do, they really somehow are pulling out. And amazingly, as soon as they said they're going to be done buying bonds, I think the treasuries have rallied pretty much straight for the last month, give or take a couple of days maybe. But we're definitely close to the highs of the year. So you've got, I think treasuries as the flight to quality play. We have the Fed saying they're going to stop buying bonds, but I think that's probably been the best trick ever. Nobody's given them any credit for actually getting bond yields lower as they exit the market. I think Alex maybe can comment on that, but nobody's given the Fed any credit for that trick. That's pretty sweet, especially when everybody knows you got a couple $1 trillion to go. So I think there's some strange currents going on. And I think money is going to start going back into stocks that are probably a little more reasonably valued, that are maybe a little behind in the market, and I think some of these momentum stocks are going to be quiet here for a little while as, people just kind of warm up to them again. But vol, for the most part, I think it's fair. Most likely it goes down a little bit from here, but again, could just as easily perk up tomorrow.
I think the market is in a tailspin right now just because you used the word pernicious. That was an interesting intro to your segment, sir. Breaking out the old thesaurus on the program. I like it. Mr. Alex, what's your take on the day that was from a broad index, from an options perspective, from an OX perspective, however you want to parse it, sir?
I think Andrew was spot on. The 10-year at 264, we would have all bet differently on that. And to Andrew's point, the Fed said that they're easing up on QE and rates went down. So go figure. A lot of new tech still is struggling. Tesla closed below 200 today. They murdered Intuitive Surgical. But NASDAQ was strange today because if you looked at NASDAQ, you looked at the Qs today, was up in the morning. About 2:30, it was down. I think NASDAQ actually traded 3 or 4 lower, and then in the last half hour, it rallied up. So, I don't know if this activity is pure schizophrenia. As Andrew pointed out, they actually, buzzed an American ship today. There was actually violence in the Ukraine, and the volatility of the German and the British 10-year was still pretty modest, and they have been kind of the volatility indicator of what's going on in the Ukraine. So I hate to say I don't know, but today is one of those days where I don't know. I simply didn't get it. I mean, one thing that came up on Bloomberg today was the fact that there just wasn't a lot of real short interest in the momentum and tech stocks, the stuff that got beat up which is curious. But one of the commentaries on Bloomberg today was the fact that there just weren't a lot of people who weren't believing in it, or if they were doing it. I mean, there's short interest, but it's not a whole lot bigger than the delta of what's available in the put options. So, today was confusing. I mean, I hate to sound like I don't know what was going on today, but I don't know what was going on today. I mean, retail numbers were good. The market went up. Then mid-afternoon, they let the air out of the balloon, and then right into the close, they took it higher. So it was kind of a real interesting day.
Join the club there, Alex. I don't think anyone has known why this market has been rallying as strong as it has for the better part of the last year. But c'est la vie. I digress. Speaking of digressions, let us digress to our final member here, our final cohort on the old All-Star panel. He missed us last episode, so he gets a double shot on this episode today. Uncle Mike, what caught your eye in today's markets, or perhaps even last week's markets you didn't get a chance to share with us? The floor is yours, sir.
The floor is mine. Well, thank you for my floor. Weeks like this are always kind of concerning to me in that there's a bunch of data coming out this week just on different days. There's various earnings announcement coming out on different days, and combine that with Passover that's happening this week along with Good Friday. And so you have potential for moves based on the data, and you also have potential for lower volume based on the holidays. So this is kind of one of those weeks to where I envy Grigas in that I wish I was a day trader right now, so to speak. So those are a couple things with which I'm looking at this week, and I'm kind of taking it easy. I'm still in a lot of positions, but I'm not being ultra aggressive at this point just for those reasons. Looking at just some of the holdings with which I talk about on the show a lot, gold had an update today, and we're still we're still a little ways away from the highs of the year, but it's still moving in the right direction for those of us hopeless gold bulls out there. And then just the market in and of itself, just looking at the activity today, this is just another one where it almost makes you want to be a day trader when you're looking at things like this, and that the market starts out at just looking at SPY, it starts off at around 182.75 approximately, goes into a tailspin for a while, and then rallies into the close, and everyone goes home long apparently, or they closed out their shorts, who knows. But nonetheless, this is one where I could see a lot of movement this week on not a lot of volume, which is always something to where if you're a more premium seller type, then you want to be careful in markets like this, in my opinion.
Indeed, dangerous days to be blowing out a ton of premium, blowing out a ton of gamma, but we say that on the show quite a bit here. I'd like to remind all of our dark side listeners that there are occasions you may want to buy a little something, have it in your back pocket. Not right now, might not be a bad time. All other things considered, given that Andrew's pontifications on our imminent demise, maybe you want to have a little bit of premium in your back pocket. Either that or you go buy a missile silo in Montana and turn it into a bunker. Whichever way you lean, we're supportive here on the old option block. Andrew, you missed our show last week on the Volatility Views program, had a great one, and we had a chance to dive into some of the new stuff coming out in the volatility sphere, in particular of interest to a lot of listeners of this program. Of course, I'm talking about VXST options. These are the VIX short-term options. They finally launched after a lot of hullabaloo last Thursday. Did some decent volume last Thursday, did about 3,000 contracts. Of course, if you parse that number, you see that the lion's share of that, a 2,000 lot, was, I believe, in the 816s. And that was pretty much the bulk of it. The rest of it was pretty much scattered little 100 lots. Ever since then, not a whole heck of a lot lighting up the old tape. The total open interest only laying around 3,200 or so, maybe 3,300 contracts, 100 lot going up today, and that's about it. So it seems like after all the fanfare, kind of has dwindled a little bit. Of course, not exactly the easiest day to launch a volatility product either. They launched it last Thursday on the day of the big 2% plus sell-off in the S&P. A difficult time to start making markets in a new volatility product. But Andrew, we've watched this product bounce around a little bit now. We've had a few days under our belt. What's your take on VXST so far? What's your interest in it? Have you traded it at all? I'm guessing by the numbers you probably haven't. But what's your take on what we've seen so far in the first 3 days or so of VXST options?
My biggest is only 2 puts have traded in the April series.
Yeah, isn't that amazing? This product is like an intense microcosm of all of VIX because no one wants to touch the puts ever.
It's just they're like, no, we're not touching the puts. So as far as Edge goes, it's been, I think all the volatility products have been trading extremely fair lately. Very hard to really find anything what I would call tasty to do. The fact that there's no interest in the puts at all also says something about how the market's viewing this product, from the downside. Like, well, like we're not running back to a 13 VIX. I thought last week that was kind of the low we were going to see. I think we hit 1360 and then zipped right back up again. This product, I think, will catch on given time. It's way too early, and it is, and frankly, it is too sketchy of a product as far as the underlying movement goes for people to get, I think, a handle on it right away right now. They're gonna have to, the volatility is gonna have to settle a little bit to try to generate what, premium sellers and something to get people's juices going. It hasn't done that yet. So while I will not say that the product is tasty, but it is not reached that stage of deliciousness yet where people want to come in and trade it. So I'm going to say it's going to be at least a couple of months of quiet before the thing really picks up, where people can get comfortable with how the short-term VXST is actually going to move.
And maybe once they start attracting some of those put traders, that's when the numbers will take off.
Well, they need to find some cheap vol, and if nobody's selling those puts,
a whopping two lot of puts trading today, and a total of looks like 30, 40, about 80 or so, maybe 90. Actually, there's a couple farther out too. So let's say let's round it up to 100 open interest in puts total versus 3,200 for the calls. So not much love for the puts out there across the board, which is interesting given the recent spikes we've seen out in VIX. You think someone would love a put here or there, but apparently not. No put love whatsoever. Speaking of short VIX positions, some other interesting numbers coming out today as well about you see FTC always releasing their commitments of traders reports, and they also include some of the vol products in there. It's interesting to see that the large speculators have cut a lot of their bets on lower vol, a lot of their short bets, particularly on VIX futures. They were only net short about 1,000 contracts on VIX futures in this last report. That's the lowest number since 2011 that the CFTC has been tracking. So interesting numbers, people cutting their shorts in the VIX futures and not wanting to touch any short positions, at least from a puts perspective in the VIX VXST options. Perhaps there's a little bit of relation there. Interesting stuff. Nonetheless, a lot of stuff to talk about in the world of volatility, but we have to keep on rolling. This isn't Volatility Views. If you want to hear all that stuff, of course, tune into Volatility Views. But now it's time to keep on rolling right on into our next segment, which is also riddled with Andrew. Unfortunately, listeners, I can't do anything about that because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the Odd Block. This is, of course, the portion of the program where we break down what's interesting, what's compelling, what's sometimes just a little bit weird in the world of options. And we're going to kick things off with I wouldn't say frequent, but an occasional appearer here, occasional guest on the old Odd Block. This is Carnival Corporation, ticker symbol CCL, closing today $36.48, down about half a buck or so. This is the name that does, about 3,000 contracts a day, doing a whopping 55,000 today. So from a volume perspective, It certainly was an intriguing day. To find the lion's share of that volume, we got to roll all the way out to Jan 2015. This is where we saw the Jan 36.5, 41.5 call spread going up. Looks like about 18,000 of the 36 halves went up against about 35,000, so almost exactly 1 by 2 of the 41 halves going up. Based on the open interest here, it looks like they were closing out the 36 halves. There was about 19,000 of those, and reestablishing on the 41 half strike. And since they did so well on their 36 halves, they thought, why not take that money and just double down on that position, literally with 2x of the 41 halves. Is that your take as well, Senior Lobster?
The lobster says yes.
Is this like a Karnak segment? You hold up the paper to your forehead? And...
Exactly. What was that? Sis boom ba, the sound a sheep makes when it explodes.
That's a dated reference for this show, but a fun one nonetheless.
Johnny Carson in like 1992, but I'm old. Anyway, I think this guy was. You remember when Carnival had those problems? What is it? Last year, maybe 6-8 months ago.
About a year ago, I believe, when they ran aground off of Italy. Yes.
Yes. Somebody probably came in and scooped some of these long-term options, and the stock has had a pretty big run over the last 6 months. So they're taking their dough, it looks like, and rolling it up. I mean, I would check the open interest tomorrow, but it looks like it was closing on the 36 half and opening on the 41. So a potentially bullish, continued bullish play for Carnival. It would be a very odd backspread trade for me if you bought 2 and sold 1 of those. I think your odds of making money on that are pretty much squatola. So that definitely, I definitely believe it's a roll. Just the long and the short.
What fun is making money if you can't then immediately squander it on a ridiculous trade?
Oh yeah, it didn't look too ridiculous. I mean, the stocks, maybe stock was trading 28 when they bought 36 halves. So they figured, what the heck?
All right, next up on the old odd block, we have a newcomer. This is Millennial Media, ticker symbol MM, trading for $6.32. And if their name is any indication, I want to just short them already. Anything that has to do with millennials just nauseates me almost by definition, but we'll leave that as it may. This is the name that does about 1,700 contracts a day, doing about 4,000 contracts a day, so roughly 2x. And it looks like the bulk of that activity came today in the May 5s, actually. We saw a big chunk, about 3,000 going up in essentially one block. It looks like they lifted the offer. They picked up about 3 cents off the offer for $1.57. This is on open interest of about 13,000 contracts. This is pretty much the heaviest open interest strike around, except for the Jan 10s. So this is an interesting trade. Could be carving up some open interest, but you tend to lean more towards the piling on the OI side of the fence. Is that correct, Senior Lobster?
I'm feeling this is a bit of a pile on. And by the way, when you trade Millennial Media, you actually have to tell the stock that it's doing a good job while you trade the
and you have to immediately blog about your feelings on the trade.
You
and then post it to your wall on Facebook.
Them with affection and kindness.
Tweet it. I just bought MM.
And the parents have to be there too.
Aren't we just being fuddy-duddies here on the show today?
I'm feeling like, why roll? My big thing is, okay, if you wrote these 5s, I mean, I'm looking at the performance of the stock. The stock is basically sat around the 6 handle, right, as a low. So if you wrote these 5s, I don't see how they're really a right. I mean, they've been above the 6 handle for 6 months. So that has kind of flown. The way the calls traded were, to me, looking like a little bit more off the offer at the time. So they look like a purchase. The bid jumped up right after that. So it was feeling like purchase. So I just think, that this was more along the lines of, buying or adding to the open interest, unless somebody got just a tremendously great fill on trying to close. So that's how I view that. But I'll check it out tomorrow. I mean, it's clearly this person has been sort of right. The stock has just kind of sat around the 6 handle, jumped up a little bit and down. But vol's up. There's option buyers for sure. I mean, the May vol's up 7 points. So somebody wants this stuff.
I think we should immediately tweet about our feelings about this odd block segment right now, Andrew. Why don't you start doing that while I roll into the next victim here on the
odd block right now and feeling very millennial.
Yes, there you go. All right, next up on the old odd block, we have a newcomer. This is IAC Interactive, ticker symbol IACI, closing today $67.13, down about 2.5% today, so not the best day for good old IACI. This is the name that does about 1,300 contracts a day, doing a whopping 6,000 today, and looks like a good chunk of that paper coming in one call spread out in October. It was the OC 7590 call spread, to be specific, went up exactly 1,000 times. What's weird about this, usually a trade like this, you'd see it go up and it would go up in one block, probably facilitated somewhere mid-market. This one, probably due to the fact that IACI, particularly out in October, not the most liquid of names, so it had to go up in a bunch of very, very small blocks, actually, which is kind of interesting. Net, it all added up to about 1,000 contracts, but still, it took them a while to get there. They had to do it piecemeal. Looks like a buy. Looks like they're buying the 70s and selling the 90s. No open interest, buying the 75s and selling the 90s. No real open interest to speak of in either. 500 or so contracts on the 75, but it's opening on either strike, either way. An interesting spread. Bit of a wide spread here on good old IACI. Looking at the chart here, it did get up to nearly 80 back in actually March. So it actually hasn't been too long since this name has gotten into that territory. Someone probably thinking that he's got a little bit of time and thinking there might be a little bit of room to run on the upside yet again for IACI. Andrew, what's your take on this? In particular, the way it was executed, so many small blocks coming in, trying to make up this hole of just 1,000 contracts.
Yeah, just a difficult fill. Trying to buy some of this stuff. It's not like these are cheap options. The OC 7590s, they're plenty out of the money, and they couldn't find anybody to take the other side. So maybe telling you this is a little more difficult to fill. Maybe the other side kind of knows this customer and didn't want to fill them because maybe they're right an awful lot of the time. But, again, volatility going up a little bit, buying out of the money call spreads in October. Can't get more happy bullish than that on a particular stock. I think one of the things is, IAC, they own Match.com and Ask, and, it's an internet company. Barry Diller owns it that makes pretty good money. It's had a good run from October, from the 50s over almost 80. So somebody's coming in here, I think, doing a little bottom scooping on this thing. And it would not surprise me if this spread was in the money in 2 to 3 months' time. So I think this is just a leverage way to use options and get long. Vol's not super high, not super cheap though. But again, difficult to get filled, which usually I think that's it's the hard trade and probably is going to end up being the right trade, it looks like.
A lot of weird paper going up in this one today, especially in the front month. In addition to what we saw out there in October, a lot of weird just front month stuff. For a name that doesn't do much volume, doing nearly 1,000 of the 865s, nearly 1,000 of the 870s, and then 1,100 of the 865 puts, 870s doing 700. Almost looks like a box went up out there, or a straddle, or two spreads to close. Someone probably closing a lot of front month activity out there in IACI as well, which is why this one was so volume heavy today, doing about 6,000 contracts today. We didn't profile the front month stuff as much because a lot of it probably is closing, but still interesting to watch. And who knows, maybe some of those 865 puts, for example, could have been done to finance the OC calls. Who knows? Or it could be all completely unrelated. It just is a lot of paper to go up all at once here in a name that is relatively illiquid otherwise. Witness how difficult it was to get that OC call spread done.
I think this is one of those things where IAC is kind of an internet stock. It's getting just sold with everything else. It's not trading at 1,000 times, sales like Twitter or anything. I mean, this makes real money on the internet. So I'm feeling somebody's doing the scoop du jour type trade and looking for, a 3 to 4x return on their call spread. That's what it's feeling like to me. If I had to guess.
If you had to hazard a guess. Now immediately tweet about that, sir, while we move on to our final listing here in the old odd block. This is Dean Foods, maker of all those delicious dairy products you see in your grocery case every day. They closed today about $15.18, about unched on the day. This is the name that does about 2,000 contracts a day, doing about 5,000 or so on the day today. And if we want to find the lion's share of those contracts, we have to roll out to January, this time on the put side of the fence, where we saw 4,000 of the Jan 2015 15 strike puts going up for prices around $1.55 to $1.60. Went up in a few pretty large chunks. Given the fact that the vol is down on the strike, looks like it could be some short puts coming in on the strike, maybe with stock, but I tend to agree with your analysis, Andrew, that this is not an opportune time to be writing puts and stock out here. Either way, 4,000 going up. There is a lot of open interest on this strike, 3,200 contracts open. What's your main guesstimate here, Senior Andrew?
Yeah, the main guesstimate, I think this is it feels like a continual seller of puts. They've done a lot of corporate actions in this. I don't know if you guys remember, they did some big dividends and things like that, trying to unlock some shareholder value. Pretty much at the lows of the year. I don't know if they're getting squeezed from, corn and milk and all those other basic commodity prices as they put out their goodies for everybody to eat. But it looks like somebody's pretty happy with selling these 15 puts. 10% return on the dollar on risk if it works out. So, I don't think it's a bad sale. Jan 2015 now is only about 8 months away. So again, I don't think it's a bad trade. I think it's actually a pretty smart one and a smart way to get long if they need it.
Yeah, puts alone, I can see it. Puts with stock, I would be a little bit more skeptical of that trade, because you're right, this is well at the bottom of the range here. Someone clearly not minding getting long a little bit at the 15 handle, and you're right, given what's been going on, that name, not a bad return if they can make it work out for them over the course of the next year. All right, that is going to do it for the old odd block, and while Andrew continues his tweeting and posting to his Facebook wall, we're going to keep on rolling right on into our next segment, the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express Block. You know the drill by now. This is, of course, the portion of the show where Alex takes the reins and guides us behind the scenes into the land known as Options Express by Charles Schwab. Alex, what are the stops on our tour for today, sir?
Stops on our tour are, first of all, taxes. And just want to remind everybody that if you haven't filed your taxes yet, you still have 1 day to fund an IRA. When I spoke to the desk today, they said they were still fielding a lot of tax questions, last-minute tax questions. That's not either a good or a bad. It's just always kind of the way this tax season goes. And as Mike pointed out, this is a shortened week with Good Friday and the Passover holidays here. So I think markets are going to be thin, which kind of, explains a little bit of what was going on today with the market bouncing around a lot. In terms of, what was lighting up the desk today, they were busy on all accounts. Sometimes I ask them a leading question and say, was it momentum? Was it technology? A couple names they mentioned today were Yahoo, which is coming into earnings, and Google, which is coming into earnings. And if you look at last year when everybody was successful selling premium going into earnings, Google was the one exception. Google was the one earnings where if you sold premium, it was not a happy event. If I recall, they moved $100, and that obviously hurt. So obviously, there's some positioning going on for Google earnings this week. Another thing that Des mentioned today is rebalancing. They were seeing money come out of momentum and go into kind of old growth, but they were also seeing money going back into emerging markets. So that was one of the additional themes today. They were busy today. The desk was busy. Option volume was decent, at least through the 1:30, 2 o'clock. And then, as I said, the market dropped off a bit and then rallied. So overall, it was a very busy day. Little schizophrenia in the market today. But again, keep in mind, tax week, last day to fund an IRA is tomorrow.
What's this taxing you're talking about? I knew I forgot something this week. I'll have to go and check my schedule as soon as we're done with the show there.
Yeah, with what you pay, Mark, the government can buy another cruiser or battleship.
Yes,
so
indeed. They can finally afford to mount the offensive there in Ukraine, so I better get filing.
They don't have to repatriate the Apple billions.
All right, and that is going to do it for the Express Block, and now we're going to keep on rolling into the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, that funky new intro means it's time once again for the Strategy Block, the portion of the show where Uncle Mike straps on the old smoking jacket, grabs the stone tablets, and dispenses some options edumacation. Uncle Mike, what do you have on tap for us today?
I want to revisit selling puts in a down market. I think that's something that there's some people out there that may have been getting bit a little bit on that recently, and I just kind of want to go through some of the real life examples that I've been doing lately and what I've been doing to try and fight against the bear market, so to speak. First off, my sentiment on the marketplace is still the same. I think we're in a buy the dips type of scenario. However, for this week, I want to put out a caveat in that I'm not going to be doing too much buying this week for reasons I had mentioned earlier. It's a holiday week, and we have numbers coming out this week, so I don't think this week is much of a very good opportunity to buy the dip. So I'm not doing a lot of stuff, so to speak, as Andrew would say, in terms of creating new positions. The other thing that I want to mention is that there's two types of traders. Or two types of ways with which I like to look at the market as a premium seller in general. You either have more reserves on the side in case something goes against you and you're not really leveraging yourself that much, or you just have a cast iron stomach. Now, for cast iron stomach traders who are using a good chunk of their account, I don't know if this is necessarily a good market to be selling premium in for a lot of reasons. I think we're going to be fairly we have been fairly volatile, and if you're managing risk, there's a lot of chances with which to get chopped out. So if you're a cast iron stomach type of person, or the cast iron stomach section of your portfolio, you may want to tread a little bit of caution this week. Now, for what I want to go through is for what I'm doing for some clients right now, that we have more cash reserves on the side and that we're using the short puts as ways of financing longer term long puts. So I've talked about this strategy on the show several times. I want to go through it again. For the SPY, we're long-term bullish, short-term cautious. We're long 100 shares of SPY. We're long a lot more than that, but I just want to kind of use the example for the show. And we are currently also long the June 174 put. So with that, we got into that put option back in January. And so what we've been doing all year has been selling put spreads with extra capital to finance the cost of the long put. So last week, we got to the point to where we were in the long the June 174 put still. long the SPY like we have been. And so last week we got stopped out, or we had to roll out of our 183, 178 put spread for April of this week on SPY. Because volatility has gone up as much as it has, we were able to roll down in the same week to the 181, 176 put spread. Now, with that being said, let's say, for example, that we end up just letting that spread expire worthless this week. And let's just assume for a second that it actually does. If that's the case, then what we're going to come out with this week, and keep in mind, I'm going to be out of this spread before expiration on Thursday. I'm not going to let it expire worthless. I think that's not a good idea, especially in a market like this. But let's just say in theory that happened. Even with the loss we took last week on the 183, 178 put spread, we still have the ability to come out only 23 cents behind this week on the current put spread that we're in, and we stayed in the same week. Now, we had the opportunity, and I was looking at this, we could have gone out another week and then rolled for an additional credit, let's say. The old down and out roll. If the short put goes against you, roll down a few strike prices, roll out another couple weeks, and you'll still get a credit. And so long as the market doesn't go down too much, you still end up getting a credit. Credits for everyone. It's that easy. Well, I chose to roll down in the same week because of the fact that my intention, or my hope, is that I want to go into Easter weekend without a short put spread on the table. So that way I'm not going to take on any weekend risk with that type of premium, with that type of short premium on the table. And also because of the fact that the premium made sense, it was the best bang for the buck, so to speak, at that given time. So more than happy to take a small loss now and then. I'm typically looking to make between 50 and 80 cents a week. And then if this week I end up losing 20 cents, I'm fine with that. Now, once again, I do want to emphasize that let's say that SPY goes down a little bit more over the course of the next few days. If we start going around the 181 level, I will be rolling down, and that will recreate another put spread in some way, shape, or form. And I was looking at a few things today as the market was going down. But the point that I want to make is that this is one to where I'm losing the battle this week for premium. No question about it. There's no possible way that I'm going to be at a gain this week on the short premium side of it. However, over time, the goal is to win the war. And there's times that you just have to retreat and do the right thing. And that's the goal, folks. And that is the strategy for today.
All right. Thank you for that, Uncle Mike Tusaw. Never a shortage of topics to discuss, particularly when it comes to rolling those puts. Listeners love to hear about that because a lot of them are out there doing the exact same thing right now. So thank you for that, Uncle Mike. And now it's time for us to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, we got a bit of a packed week from an Around the Block perspective. As Alex and Mike mentioned, it is the truncated week. So with that in mind, we have a lot of numbers, a lot of news coming out today, a lot of earnings on the horizon. We'll start off with my favorite, the old stealth Apple, aka Chipotle, coming out on the 17th. Bank of America on the 16th before the open, so remember that. AMD on the 17th. Google on the 16th. Goldman Sachs on the 17th before the open as well, so bear that in mind. IBM on the 16th. Intel, my old stomping grounds, on the 15th. Tomorrow, Netflix on the 21st, so next week. Schwab, a little name you may have heard of, on the 15th before the open. So hopefully you got all your positioning in Schwab today before the close, and of course Yahoo tomorrow as well. So if you're playing in the tech sector and the banking sector, this is an important week for you to keep an eye on. And since, Alex, it is Schwab Day tomorrow, why don't you take the lead here and tell us what you're watching for the rest of this week?
Well, as you pointed out, lots of big earnings. We're keeping an eye on the Ukraine, obviously. Little surprised that there wasn't more volatility in the bond market today, but looking at the bond market, amazed to see the 10-year trading where it's trading. And given the kind of activity we had today with the up, down, up, watching the short-term VIX a lot, because I think that's going to become a barometer of what's going on in terms of very short-term moves. I mean, clearly, by definition, it's going to be the barometer, but not fully understanding what happened in the market today. Willing to openly admit I'm a bit perplexed by what today's activity was like, and that may just be attributable to the fact that markets are thin because of the holiday. I'm a little suspicious that markets are going to get thin as some of these high frequency firms, lessen their high frequency activity. But that's what I'm looking at.
And Mr. Rock Lobster, what are you watching for the rest of this week, sir?
Earnings. I think the earnings actually is going to matter this cycle, mostly because we've had a pretty good sell-off from the highs. Volatility is a little higher. I mean, when was the last time we went into an earnings cycle where there's actually some real premium to at-the-money options besides the earnings stock? So you actually have pretty decent volatility in all the major indexes. So, a good part of this market was, rallying on this continued earnings growth we've had. So if you're a bull and you're long, own some stocks, I think that's good as long as there's strong earnings growth. But I think this will be a nice earnings to see it. Wells Fargo, okay. JP Morgan, not so okay. I don't know how JP Morgan can make any money with all the fees and penalties they have to pay the government for stuff they did like 5 years, 6 years ago. But I think the earnings are going to matter. So I think this week and next week is really 70% of the earnings come out, or 65% of the earnings come out in this next 2 week stretch for the quarter. So this could be a catalyst one way or the other. There's a couple bellwethers tomorrow, so we'll see. And other than that, it's just I think the Russians now are just basically just having fun with the world, just doing what they feel like in Ukraine. Plays good at home for them. If you remember when Argentina invaded the Falklands, it kept them in power for a couple more months until they lost. So nothing like a mini war, especially if you win something without any bloodshed. So I think Putin will continue to antagonize the West for a while he can get away with it. And at some point, the market will get used to it. I don't know if it's totally used to it yet. So, besides you got a little geopolitical unrest and some earnings that might mean something, those will be the two things that I'm watching. Like too, so I think this could be an opportunity to step in and own some and buy a little more if you've got some cash on the sidelines. I think you'll get a good signal by the end of this week how good it will be as an opportunity.
Andrew throwing out $10 words and now a reference to the Falklands War. So all sorts of good stuff coming out of Maine today. See if you can follow that up. Uncle Mike Tusa, what are you watching for the rest of this week?
Apple. We got earnings coming up tomorrow on Apple.
I'm afraid you'll be very disappointed, sir. Your minions have steered you wrong again.
They've steered me wrong? How have they disappointed?
You're paying them the wrong jams and jellies, sir.
Oh, so Apple's really not have earnings tomorrow? Oh, my goodness. I messed that up again. Oh, well. Apple, we have earnings coming up. So right now, I'm not expecting a ton of movement from Apple this week. However, you never know. But nonetheless, I'm hoping to have the full Apple Hedge plan put in place by Thursday, but want to see what it does over the course of the next couple days to be prepared for the earnings announcement. And I'll definitely fill the listeners in on that when it happens.
And we'll be waiting with bated breath, sir. But unfortunately, that's all the time we have for this episode of the Option Block. Before I go, really quickly, let me check in with each of my cohorts on the old All-Star panel to see what they're kicking around that may be of interest to you, the listener. Starting off with you, Mr. Andrew. I know you guys have a lot of cool stuff cooking with that gold course and the mobile and all that fun stuff. So what is coming down the pike from the land of the pit?
We actually have a webinar we're going to be putting out free in the afternoons. I think it will be probably within a month or so, but why you need to take the gold course, learning about how options work. And the webinar actually will be all about, what the course does, how it should help you with investing in general, understanding how the options market works. You know, if you like this show and you like the stuff that you hear about on the show, our gold course basically teaches you how to trade and to look to take advantage of, you know, market opportunity when it presents itself. So I think it's a good opportunity to learn about it and check it all out. And the price, as Mr. Tusaw would say, is right.
There you go, sir. You may now go about your business. And Mr. Jacobson, what is coming down the pike in the land of OX education?
So let's talk about 2 live events. The April live event is April 26th, Saturday, 3/4 of a day in Schaumburg. Jimmy Ruzan, who's one of the educators and a former market maker on the floor of the CBOE, actually worked with both Andrew and Mr. Sebastian. April 26th in Schaumburg. I will try to make an appearance at that one, do about 5-10 minutes on the hub. The May live event is May 10th in New York City at the Westin Times Square. Again, same format. If you can't make the live events, we simulcast them on the site. They are free. So if you don't want to come out on a Saturday, want to sit home with the dog and your slippers and a cup of hot chocolate, simulcast on the site. Just come to optionsexpress.com. Let me touch on 2 webinars. Wednesday, the 16th, Dan Gramza from the CME is going to talk about currency futures versus Forex trading. Interesting. And now that OX has become a Forex platform as well. And also on Wednesday, Marty Kearney from the CBOE, also a former market maker, now works in the Options Institute, my old shop, is going to be talking about vertical credit spreads. So all the events are free. Just come to the site and register. One other note, Idea Hub going to Schwab Mobile should be there this month, should be there in April. It will be a little bit of a lower powered version on mobile, but the intent eventually is to bring the full Idea Hub to the Schwab client base. Starts on mobile, should be there in April.
All right, and last but certainly not least, Uncle Mike, what is cooking in the old webinar train department?
Where to place your short strike prices for iron butterflies as well as iron condors. It's going to be Tuesday the 15th, a half hour after the market close. For more information on that, go to www.rcmwealthadvisors.com/webinars. Let me rephrase that. It's going to be where to place all of your strike prices for iron butterflies and iron condors.
And of course, immediately followed up by the Stupids webinar that we've all been waiting so long for.
I'm gonna keep the weight going on that one. It's gonna be the most colossal Stupids webinar in the history of all Stupids the day we do it.
The stupidest of all stupid webinars, and we can't wait to see it. All right, thank you for that, Uncle Mike, and of course, thanks to all of you out there in the listening audience for downloading and streaming and subscribing to the program, and of course for writing in with such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.